President Barkin, welcome back. Good to have you.
Thanks, Sarah. Good to be here.
So it's not really a debate now whether there's going to be a rate hike in March. Fed Chair Powell pretty much said as much. But now there's this discussion about how big the Fed should go to combat inflation, a 50 basis point hike, for instance. How are you thinking about what needs to be done and when?
Well, I'd like the Fed to get better positioned. I think we've got a good part of the year to get there. And I think how fast we go just depends on how the economy develops.
5 interest rate hikes, I think, is where Goldman was this morning, this year. Do you think that's what it's going to take to bring down inflation?
I think a lot depends on how the real side of inflation develops this year. We know that goods supply chain issues are going to ease in time. That should bring prices down. We know there's pressure on the service side from rising wages. That'll put pressure up. And I'm just going to be looking to see how inflation develops through the year.
But to Sarah's point about Goldman now expecting 5 hikes, a lot of the other Wall Street firms have caught up to that area, or even more. Bank of America's at 7. So when you see those estimates, I know you're going to wait for the data, but when you see those estimates come from high-level economists saying 5 to 7 hikes in one year, does it make you pause and think, yeah, we are a bit behind the curve here?
Well, it's hard to know where the curve is when it's hard to see the arc of inflation. So I just come back to the question of positioning. I'd like us to be better positioned. That position is somewhere closer to neutral, certainly, than we are now. And I think the pace of that just depends on the pace of inflation.
What about the yield curve? It's really flattened lately, which has surprised a lot of folks. What does that say to you?
Well, I think we have a lot of influence on the short end of the yield curve, certainly. And you've seen short rates increase as people have talked more about us normalizing our rates. I think the longer side is influenced by a lot of things, most notably global opportunities. And so I think there's just a lot of global money that trades the longer end of the curve. And I have a hard time making much out of it in that context.
Do you have less confidence, maybe only at the margin, but less confidence nonetheless in your own and the broader Fed, your colleagues' inflation predicting powers than, say, 6 to 12 months ago?
Well, I've given speeches saying that I didn't have a ton of confidence in any precise, prediction. I think there's a lot that goes on inflation. As I said, I think we're going to see goods prices ease. They're significantly higher than they've been historically, and we know that's due to supply chain issues. I think the thing I'm really watching is labor wage pressure and the impact of that wage pressure on service price inflation. And obviously, demand's going to play a big part in that as well. And we'll see how the year plays out.
I know you in previous interviews have always worried, President Barkin, about the job market and about getting back to full employment. And yes, 3.9% unemployment rate is good and strong, but we're still 3.6 million jobs short of where we were at the beginning of the pandemic. And certainly the participation rate is not back to pre-pandemic levels as well. Do you think we are at full employment?
Well, we're about as tight as you can imagine right now. When I talk to my contacts, that's what I hear. I'll call that maybe an interim full employment. Is there still upside for the labor market? I really do believe so. I believe a lot of the people on the sidelines are on the sidelines because of COVID. There was some interesting data this month that talked about 12 million people. This would have been during Omicron, maybe second week of January, out of work because they had COVID, they were quarantining from COVID, they were taking care of somebody, or they were concerned about it. And so I do think there's an opportunity to get more people back in the workforce. But that doesn't mean that there's slack as we sit there right now. If you're trying to hire somebody right now, it's very, very tight.